You are seeing this trend in crypto right now at the open source layer, at the credibly neutral layer, of actually making certain parts of that more closed source over time to capture more and more value. And I would make the argument that Ethereum actually is still potentially the only one with the North Star to be a purely open source.
Quick shout out to today's sponsor, Katana. We'll hear more about Katana's 1 billion cat campaign later today. But for now, let's get into the episode. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another episode of Bell Curve. You got me, Miles Zave. Happy New Year. How's the time off?
Great. Happy New Year. Got some sun in Florida. Are we past the Larry David deadline for saying Happy New Year? I think that's Jan 3rd based off of Larry David's evaluation.
I'm actually, is the rule just you can't say Happy New Year after a certain period of time? That feels like a Larry David rule.
Yeah, exactly. We're getting close.
Miles, you had some heart attacks over the break.
I did. A vicious 20-pound terrier bite my fiance.
I'm so sorry, buddy.
It's just he's getting old. So yeah, don't.
He was threatened. You have a new lady in your life, and he was threatened. He's like,
I guess
this
so.
is my Miles. This is my Miles.
That's his way of showing it. But yeah, apart from that, all good. Year is off to a great start.
So you know what? It certainly is. I think 2026 is going to be a good year, and we are going to speak today mostly about software. So the theme to this episode is commercial open source software. So we're going to go back, like really brief history of just how software came to be as an industry, because similarly to crypto, it was kind of this amorphous thing that there was no IP protection around, no business model around, and it kind of grew in this way that disrupted the profit stream of the computing industry, which was very hardware oriented. But it did give rise to open source software, which people didn't really understand how to make money on for a long time. You have some success cases like Red Hat. It's used as a tool within big Web 2 competition. The Amazons and the Googles of the world have leveraged open source as a tool, as it were. But L1s fundamentally broke this trade-off. And so we want to introduce crypto into this story and lineage of software. And then I would love to actually end on AI and how AI is even complicating the picture further. And that'll lead into this kind of 3-part series that the three of us are going to embark on AI and crypto and what the intersection looks like there. Because even though it went through a little bit of a hype cycle earlier this year and last year, or in 2025 and late 2024, I think we're all convinced that there's a there, and it's very interesting. And so we're going to do a deep dive on that and maybe sift through the wreckage of some of the broken ideas and try to find some diamonds in the rough. But Miles, I know you've done a bunch of research on this. Maybe I can just kick us off with just to kind of set the context of the history of software in general and how it evolved. And then maybe I could turn it over to you for the development of open source software and some of the early business models. But it's a really interesting history. And I've talked about this on the podcast before. I would highly recommend the book, How the Internet Happened by Brian McCullough, who talks about some of the early days of the internet, software, etc. Now, he kind of starts with the internet, but the through line in between the development of the internet and software in general is that it was largely academic and in many cases government and kind of research funded, right? So for the internet, you had ARPANET, which was part of the defense apparatus of the United States. In the early days of kind of computing, the business model was entirely about selling large computing mainframes, right? This was the IBM business model. You'd sell a computer the size of a 18-wheeler, to some university or government, government entity or something like that. And the software was really an afterthought. And you did have some early pieces of software like Unix coming out of Bell Labs, but it was really pretty sleepy until I think really Microsoft was the first massive company that got built that showed that you actually not only could make money with software, but that you could actually be the platform and extract and disrupt a lot of the hardware profits. And that was kind of the core platform that was super, super valuable. And there's some really interesting stories of those early days of, IBM, this sounds hilarious to say now, IBM just didn't think software was core. So they licensed out Microsoft to build software, the operating system, as it were, for a bunch of the early machines. And Microsoft didn't actually build it themselves. They licensed QDOS, which was kind of this open source thing for $50,000. I mean, there are these crazy stories. That QDOS license is probably the highest ROI investment in the history of business. And even in those early days, the business model of closed source software was a huge question mark because software was not legally intellectually protected IP. It wasn't IP, so you had no protections. Anyone could just go in and copy it. Microsoft was part of the lobbying effort that branded software as intellectual property. However, what that did do was imagine, as nerdy as crypto is, imagine the early internet enthusiasts that were building software when computers didn't even have screens. They just had these little lights, that you would input your software and it would output a certain series of lights like Morse code that did a calculation for you. Imagine how those types of people. And so when Microsoft and some of the early software businesses pushed to do closed source and treat software as intellectual property, it led to this movement that would eventually become open source software. So you just had people, similarly, this will probably rhyme with a lot of the folks that you see in crypto today, who are highly ideologically driven, and just said, there's just an ideological perspective that code and writing code should be free. And that cultural idea, that meme ended up being really, really powerful. And some of the early open source, tools were, there was kind of GNU and free software. So there's a guy, Richard Stallman, who launched the GNU project in 1983. And he really was kind of this software it's a freedom and it's a moral issue kind of guy. The issue is that there were a bunch of compilers and tools and libraries, but there was no kernel. That got introduced in 1991 with Linus Torvalds. So he was a Finnish student, and he just had this hobby kernel called Linux. And the magic ended up being the combination of these tools, these libraries, these compilers, these free open source tools with the kernel. And that gave birth to the Linux operating system. And there's a whole really interesting history here that probably doesn't bear mentioning. But a lot of things happened like you might see in crypto today, right? Because Linux wasn't a for-profit entity, they had to figure out things like governance. And the other thing that ended up happening was this grassroots community of developers that contributed for free because of this ideological buy-in and this, resonating with the message of moral freedom and things like that. And Linux really grew and developed and became highly used. The question was, how do you monetize it? And people didn't make for some, and this is kind of the origin of many of the value creation versus value capture stories that people love to talk about in Web 2 and had found their way into Web 3. I don't know, I'm monologuing it here a lot, Miles. I don't know if you want to, like, Red Hat was a super interesting development in this history, and that gave birth to this investing style and this whole category of commercial open source. So I've talked way too much already. Can you take us away with the Red Hat example?
Perfect lead in. I think there's a lot of things that rhyme between this open core commercial open source software space and crypto. And I think in general, we're doing this episode because there are lessons we can draw from, I think, the earlier, open source and open core because it came earlier, and there's just a lot of things that rhyme with what we see in crypto. And so, I think OSS was kind of as you said, a pushback against making, everything proprietary and seeing these large incumbents just, kind of cement their advantages. Right. And it really started with, I think which is even older, which was the free software movement. Right. So there's an ideological movement that software should be free. And frankly, it sounds a lot like the early crypto folks. It sounds a lot like the early Bitcoin core devs and community as well as Ethereum, right? We're talking about open access to services, and those services are run on software. And so, but maybe backing up a little bit to open core, there was a split in the communities between these ideological folks that believe everything should be free, and folks that looked at open source software and saw, this is an interesting commercial strategy, right? And so how this usually works is that somebody will put out some sort of open source software product or service. And in like a very bottoms up grassroots motion, this will become, if it's good, it will quickly become loved within like developer communities, right? This is like what they're playing around with on the weekends. You build up a ton of GitHub stars. Word of mouth is like very, very powerful within these communities. You'll see this stuff on like Hacker News, right? And then once you have like you basically use open source as like a distribution hack, right? And from there, you commercialize or monetize your open source project through something that's called like an open core company. And, crypto like analog is like, this is like the development companies, right? Associated with, this is like the Red Hat for Linux, right? When the Linux Foundation is maybe like the, like token foundation that we see in crypto a lot. And it's usually centered around like adding proprietary features and reducing friction generally, right? So like they will offer a hosted version of the SaaS, like a SaaS version or a hosted version of the open source software to reduce like DevOps headaches. They will think about, okay, what are like proprietary features that we should only include in the paid version, even if we maybe make all like the source code available. Like some of it's going to be MIT licensed, some of it's going to be like proprietary, right? Again, we see that in crypto a lot. And I think like the general sort of philosophy has been, you keep like best in terms of best practices, like the features that are used by individual contributors, those are most similar to your original open source users. Those should be part of the open source code base. The features that, buyers or managers of the software want. So this is things like role-based access control, or like maybe even just like usage limits, like that should go into the enterprise, SaaS version that you actually pay for. And maybe what I'll say like on the open core side is that there are like, it's not a new category. It's been around since Red Hat. It's definitely grown a ton as a category, but there are still a lot of skeptics. And those skeptics, like the conversations between like the proponents of open core companies and the skeptics of it sound a lot like what we hear in crypto, where, I think like at some point, if you're not careful, you run into a tricky trade-off space, as a company that is like both the proprietary the primary contributors of the open source project and the ones trying to monetize that project with a company. At some point you have to kind of decide, like, if we have 20 to 50 people on the team, how many people should be focused on adding features to the open source version versus the paid version, right? And what we've seen quite a bit is that you obviously like the incentives are such that you want to prioritize the paid features. And so we've seen the pitfall in the past of like open source communities losing or open source projects losing the communities that made them successful because, they just try to monetize as much as possible, and they basically stop investing in making the open source project like, competitive, right? Or, you relinquish your control of the open source project. Governance comes into play. Like the only time I've ever heard like software governance outside of crypto is in the open core communities. And they don't usually have tokens, right? So it's actually like kind of complicated. But we've seen really successful versions of this, right? Like Supabase is like a great example of this. So they took, they built like a database project on Postgres SQL. And people love it. People like really love it. And it's now like a legit competitor to, large companies like Google, right? For database software. So yeah, maybe I'll pause there just on like, that's the open core side of how, like, where does open source software like touch in a commercial setting? Like the first one is this rise of open core companies. And this is like a really cool category, frankly. I find it interesting to study. Recommend folks checking out like Open Core Ventures or OSS Capital. Those are two like venture companies that have like wrote a lot about this space, and I think there's a lot to learn, I think, as we'll get into.
Yeah, so I think that maybe to start to parse these out into different eras, I think the Red Hat story was a really big one because it proved to investors that there was a way to, so you kind of had this trade-off, right? Of closed source software, which was highly scalable, very monetizable, and open source, where it had these superpowers, where you actually had a bunch of contributors who were in many cases, highly talented contributors who would work for free and get wide adoption. But as soon as you tried to monetize it at all, you lost the core advantage. And so there was a period of time in tech where it felt like both sides were going towards their extremes and stagnating. So you had the Ballmer era of Microsoft, where it was just, enterprise software and kind of boomer central, and they were losing talent. They couldn't get developers or anything. At the same time, you had Linux, which was taking off, but you couldn't monetize it. And Red Hat was this super interesting data point that even if you don't sell the software, you can sell things like stability and build a big business that they eventually sold to IBM for somewhere around the tune of $34 billion. And that was a strong data point. And I think since then, a couple of things have happened. We're going to end this episode on crypto and AI, which are huge developments, frankly, in this long tapestry and trajectory of open source software development. But two other things that happened were cloud. Cloud was a huge moment in open source software, and it made Web 2 giants get far more sophisticated about how they leveraged open source software as a competitive tool within their tool belt. Often to neutralize the advantage of people that they were competing against. There's a great example here of Kubernetes being released by Google to commoditize a product that Amazon was trying to release. I also think maybe we don't really need to talk about this, but I do think GitHub and this kind of era that we're entering of developers producing code on Amazon for like kind of status and clout and cred to leverage job offers and things like that later. Crypto, there are so many things like that rhyme with crypto and CT. I do think crypto is really good at anticipating the future, often unintentionally, but I think that's another interesting thing to call out. I do want to call out, I want to go into this era of cloud, and maybe we can bleed a little bit into AI here about how big corporates think about leveraging open source software as a tool. And, there are a lot of guys like Bill Gurley, analysts and VCs have talked about this, and listening to them, this kind of rich history, it just makes me think in crypto, we're a little bit naive, I think, about open source software sometimes, and we've overgeneralized and learned some of the wrong rules here. And one pretty persistent strategy that big corporates will use is they will leverage open source to neutralize the competing product, or to use investing speak, like commoditize your complement. So there was a great example when cloud was becoming a thing, and you had AWS lead the way, but then Google, kind of fast followed, and actually Microsoft with Azure. And there's obviously a hardware component towards building out these cloud data centers, but there's a software component as well. And soon everyone kind of became convinced, right, that there's not an enormous amount of differentiation in between the underlying cloud computer. The software, it could be a big lock-in area. And if you build your business on, AWS, how easy is it to port into another cloud provider? And Amazon anticipated, frankly, I guess they didn't necessarily anticipate it because you already had Apple and that App Store lock-in. But the thought process was, okay, if we think that we're heading towards a future where there's a low switching cost between different cloud providers, if we build an enormous amount of software, like tools, libraries, whatever it is, to lock it in and make it very difficult to switch, that sounds really great. I could juice my margins. I could do what Apple's doing and juice my hardware margins, or whatever it is. And so Google rushed to market with Kubernetes. They didn't want Amazon to be able to limit the switching costs. And so they launched Kubernetes, this open source piece of software, to neutralize that layer, and to make it, the switching costs very easy. So I think that's just a fascinating example of how, and of course the messaging is Google loves developers and we're doing this as a gift and it's free, but it was just a genius business strategy. I think that's fascinating as an example here.
Yeah, exactly. And I think, Facebook's doing kind of the same thing with Llama.
Exactly.
I haven't been as close to it. I wonder, is it a little spicy take? Like, is Base a version of that, taking the EVM? And that's obviously led to more sort of monetization for Coinbase, taking that away from Ethereum, even though Ethereum core devs were like, rollup centric roadmap, go do this. I think in hindsight, that's like maybe a bit of a stretch and a lot of nuance there, but if you squint, may be fair. I don't know if you guys agree.
Yeah, I think maybe, it's been a great sort of historic view of open source and, where winners have come out from open source versus closed source, et cetera, and business models there. Interestingly enough, Miles, you just mentioned like Llama from Meta. Without going too deep on the crypto and AI side, yes, on the open source AI side, what's happening today is Meta did come out with that business strategy, but ultimately, actually, very recently, they decided to kind of deprioritize that path because they realized that closed source models were just getting too far in front. And even though they were trying to dig into the market share of, OpenAI, et cetera, it didn't make enough of an impact. And so it is interesting, and I think we're seeing it in blockchains today as well. We have these major layer ones like Ethereum and Solana, et cetera, which actually do align a bunch of incentives and have a lot of people contributing, et cetera. And Miles, of course, you're very, very close to this at Delta with regards to like how do you align incentives, how do you get developers on board, et cetera. And I think, Mike, you mentioned it before with regards to like switching costs. And so, again, taking you back to what you said as well, Miles, around like base. So you have these open layers in crypto, which are like credibly neutral, like Ethereum, Solana, et cetera. And I would say actually that base in some sense is actually taking the open source stack of Ethereum, especially the EVM, and then monetizing that on top with like their existing distribution. And so I think you see many, many parallels actually in open source software that you guys just spoke about and crypto today. And I think we're maybe halfway through that transition in crypto right now with regards to actually monetizing some of the open source software that's been created in the past. But it's still an open debate, I think, right now. How can you create lock-in? Because it goes against crypto's fundamental values. And I'm sure we'll touch on that in this episode with regards to the business model itself of trying to monetize open source software, and creating lock-in goes against the freedom and permissionless of crypto as a technology. So yeah, it's an interesting space in crypto because it's one of the only technologies ever in open source software which has made it possible to actually align incentives and create a business with. But then at the same time, we're now seeing the reverse is true, where you can also monetize it, centralize it, and go against crypto's ethos and still have a good business.
Yep, 100%. And yeah, maybe to take like a little bit of a step back, and then we'll come right back to that, Dave. I think like the open source communities, like outside of crypto and open core, has always been like very interested in crypto, and vice versa, of course. But I think I remember listening to this awesome podcast with Nick Carter and Joseph Jacks. He's the founder of OSS Capital from 2018, 2019, on Castle Island's pod. Not to plug another pod on our pod, but it's a good one. And I think at the time we were looking at some of the trade-offs of this open core strategy, right? Which always ran into these tensions around what to try to monetize, what to, keep open source, and how to, relinquish governance, but keep sufficient control, how to, I guess, not like lose that community that got you there in the first place. And they looked at L1s in general, because at the time it was mainly just L1s out there as potentially a breakthrough here, right? And Dave, I think you just referenced this a little bit, for the first time, let's say Bitcoin and Ethereum was the representation of open source software where monetization was baked into usage. You have, first of all, blockchains introduced verifiability and hard guarantees to the internet. And so, unlike the internet, anybody could, if you ran the software and you connect to the network, you can verify that everybody is playing by the rules, right? But to do that, right, it has to be open source in the first place, right? So all of L1s are open source because that's required to fulfill this promise, right, of adding guarantees to the internet. But on top of that, there's a single instance, right, of Bitcoin and Ethereum that is valuable. It's one shared state network. And to leverage the services provided by this network, whether that's for payments or holding this non-sovereign store of value, you have to pay. You have to pay the operators of the network. And I think with EIP 1559, with the burn associated with that, right? Now that's actual direct value accrual to token holders. So you have a development company that puts out this blockchain. They own a bunch of tokens that represent some, stake in the chain, either direct control for POS networks, or, a say over like who can run validators or something like that, right? And if there's like monetization to the token or value accrual to the token baked into usage of the blockchain, we no longer have to build like a commercially viable separate company on top of the open source software. We can just hold these tokens. And if it's a great product, like all of the people who built it and hold those tokens get rich. It's fantastic. So that was like actually the primary breakthrough. And why the space was like looking at crypto, like, oh my gosh, maybe they've actually got something really interesting here. Now, there's lots of nuances, and like even within L1s where monetization is baked into usage, like we know that at the very least this is like for DDoS protection, so people can't just like spam the network.
I was going to say it's funny the
like pricing. Right.
And also the burn was originally introduced as a UX optimization. It was a the auction that people used to have to. People forget before 1559 the auction mechanism of getting a transaction placed on Ethereum. It was crazy. You had to estimate the gas. You had no idea what. So it was really a spam prevention mechanism, and it was the nuance there is it was a UX feature, although you didn't have to burn. You didn't have to burn the base fee. You could have given it to the next. There were other schemes, right? But the burn was chosen to prevent off-chain validator collaboration, and it ended up looking a lot like value accrual. I flip-flopped on this a lot. I've been like, I think that's overhyped, but now I think it's very clean. And Miles, I want to make sure that folks didn't miss that, because this was the fundamental innovation of at least general purpose smart contract platforms like Ethereum. And Bitcoin does get an enormous amount of credit. It absolutely should. It solved huge computer science problems, the Byzantine general problems, and proof of work. Those are massive innovations that led to Ethereum. But Ethereum itself deserves an enormous amount of credit for breaking this trade-off around monetization of open source software, because Bitcoin hasn't really solved that. Its design is, things like fees and REV are naturally, it is unoptimized for. It is a big meme coin. I think it's a very compelling meme coin, just like gold is, but there's no hard productive value. That's not to say it's not real value. It's just, it's valuable in the way that precious metals are valuable. Ethereum is very different, and it broke this trade-off of you have something that's open source, and so you get free contribution, and people want to use it and buy it because it's neutral. You get that trade-off, but then you don't have the negative trade-offs of, closed source, of it being monetized and yada yada. You can have both through this monetization scheme of you need to pay for usage in the native token. For what it's worth, this is also why I'm not a big fan of people talking about Ethereum's monetary premium like it doesn't need all these. You have this beautiful, beautiful mechanism, right? You solve this unbelievable challenge. The ability to generate fees should be massive here, and super exciting. And I don't understand why people continue to shortchange Ethereum in that regard. But that is the fundamental trade-off that it broke. And I think that crypto has a really bad habit of taking, like, overgeneralizing solutions from the early success cases of Bitcoin and Ethereum into a bunch of places where it doesn't belong. And this is where I want to go into like L2s and infrastructure, which I think just had the wrong mental model. And my favorite one on Bitcoin is the 21 million hard cap people have applied to applications. It's like, you don't need that. We don't need to reinvent equity financing. It's much better to not have a hard cap. But I think that people took this idea, the breaking of the trade-off and paying in the native token as a way of monetizing open source software, and they overgeneralized that to applications and additional layers of middleware and infrastructure where it didn't belong. This is where you get this whole idea of a utility token, which is a broken idea and doesn't really make any sense. But people did.
Yeah, to be fair, like L1s broke the trade-off of like the value accrual trade-off associated with open source software. I don't think they broke the governance trade-offs. Because the other one I mentioned is like, the more you lean into like open source, ethos and decentralizing control and like of the open source project itself, the harder it is to be competitive, right? So I would argue that like Bitcoin and ETH have been, they had like ideological roots, and they've stuck to those. And it's been challenging to stay competitive with, I'd say, like new open source blockchain projects. So like Hyperliquid and Solana are probably the best examples of like breaking both trade-offs. They've managed to find a community of users that like are okay with them retaining enough control to stay competitive, and they've implemented, the sort of value accrual like baked into usage. But then outside of that, like there's a ton of issues. I think it basically gets really hazy as to like whether or not like we break these trade-offs outside of L1s. I would argue no, but I think everything outside of L1 still should be, most of everything outside of L1s in crypto, if they're part of the value prop of providing verifiable services, like they should be open source. It's just monetization is not as naturally baked into them. Remember like 0x, like one of the oldest AMMs or DEXs in the space, originally had people paying fees, in that token. And everybody's realized that's a really, really bad idea. Or it's just like a bad product, right? But yeah, Zave, I know you want to jump in, so please do.
Yeah, I think maybe just to paint a picture here, one thing that's interesting, which has been happening in crypto the last year or two especially, or a few years I should say, is in the open source landscape. Miles, you mentioned Solana and Hyperliquid as well, coming up as major open source layers in crypto, which is definitely true. However, at the same time, Ethereum, and actually Vitalik came out with a tweet about this, very recently, I think it was this week, around the sort of North Star for Ethereum as being this incredibly neutral layer and how important that is for Ethereum. And he copped some criticism for that. Solana was built as an open source software stack that was a bit more top down. So yes, it's open source. However, there are like little colors of closed source in Solana, especially at the application layer. So when we used to work with Solana apps very early on, when we were building Lighter for Solana back in the day at Chorus One, a big criticism of the Solana ecosystem was actually how they were closed sourcing the apps. But it's never been significant enough for people to care and stop building on Solana. And so that goes to show the base layer being open source is actually theoretically more important, at least the market decides that right now, than the applications themselves. I also want to point out Hyperliquid here, because yes, again, it is another successful open source layer. However, a lot of the binaries, etc., that they were giving to validators were not open source. And so there's a lot of Hyperliquid actually that is not open source. And so I just want to actually point out this trend, which is I do think that you are seeing this trend in crypto right now at the open source layer, at the credibly neutral layer, of actually making certain parts of that more closed source over time to capture more and more value. And I would make the argument that Ethereum actually is still potentially the only one with the North Star to be a purely open source layer. And again, we've spoken about this on the bell curve in the last few weeks, but I do think that's interesting to point out that you're now seeing a divergence between new layers trying to top down close source certain parts and capture value versus like the Ethereum style of credibly neutral North Star.
There was a debate that went late into the night of Blockworks last night. We launched this data website, and there was a debate around how should you treat the REV fee stream of something like Ethereum compared to the revenue or something like Hyperliquid, from a valuation perspective. Like, one, do you put them in the same bucket? Like how Hyperliquid and Ethereum, like the REV gets equally paid out to token holders, and it's generated in this very different kind of holistic network rake sort of way, versus the revenue stream that comes from Hyperliquid is derived from it's almost like having a very successful owned app on top of the ecosystem. And so should you treat those the same? Anyway, there's like we're not going to go down this rabbit hole, but there's a deep rabbit hole there to go down. That's
can I add one little comment on that?
Yeah.
A little bit closer to this conversation. I've seen like L1s be really successful from a monetization standpoint while being open source, when they have MEV and they host execution directly, or they host an app directly, right?
Yeah.
You and I did a bunch of podcasts on like Celestia back in the day, like modular blockchains. And there was this idea of like, and maybe ETH-L1, like, for roll-up fees is in the same boat of like Costco, right? Where they're, kind of like, not able to monetize directly. Yeah. Great company.
Business.
And so like, yeah, no, that's a great, like, don't worry guys, like we'll monetize like Costco. right? We're not like, because I'm building a similar, like Delta is similar like that. We very purposely offer apps to control their own execution environments, and you're just paying for like settlement, right? Which is basically like aggregated, state updates. And there's no easy way to price that, because you can't just be like, yeah, 1% of your revenue should go to the base layer, because that's not the way like these modular blockchains work, right? So maybe just as a fun, like, because I love nerding out on like blockchain financials, I think that if you host execution directly and there's MEV across a lot of apps, that's been proven to be like very monetizable. If you choose to host a blockchain with a single app, like that's been clearly monetizable. And the jury is still out on, I think, like any L1s that don't host like execution directly. I mean, look at Bitcoin. It's the biggest one. There's no execution really. There's nothing happening over there. So I don't know. Sorry for the tangent, but yeah.
We have our whole story or our whole episode to do on buybacks. I have a lot of thoughts about this, but let's. I want to get back to layer twos here specifically, and I want to talk about this trade. So okay, let's go back to our point in the narrative story here. We are very excited because historically there's been this trade-off of you get these wonderful things with open source, but you can't monetize, or you get closed source and it's very difficult to build community. Amazing. L1's introduced this great trade-off where you pay for usage and you seemingly get, in some cases, maybe governance excluding your miles, the best of both worlds. So we start to overjet, but maybe because governance is so slow, we can't move fast, it's ossified. We start to get, and fees are high on something like Ethereum. We start to get these let's call them vendors, because I think it's going to dovetail nicely. These vendors that build on top of Ethereum, and they solve core problems with building on Ethereum. So that's everything from, it's really cost, confirmation time, but there are other, actually it creates issues around interoperability as well, but it ended up being around speed and cost, I think. And so a lot of these L2, I don't know if people remember L2s in the beginning, but a lot of people were questioning, why do we need a token for this? And there were questions around where was the revenue stream and the lock-in and the token sync going to come from? And were we going to pay for sequencer fees in the native token and things like this? And I think that a lot of the business model for Ethereum, people generalize to L2s. And at the same time, you also had, this was when the modular meme was taking off, and you had these other services that were popping up to solve the problems with L2s. So, okay, L2s are not interoperable with one another. So you get shared sequencers. And by the way, it's actually not even super easy, even if the L2 is fast and cheap to build there. And so you might need these other services that make it super easy, like a RAS provider. And so you had all of these different infrastructures pop up to provide this patchwork and solve this problem. And many of them were operating with a lot of either explicitly or implicitly the model that Ethereum had set. So we don't really need to monetize. We're going to have a token that we're going to stick in here, and the usage will pay for all of this. And we are now in January of 2026. And I'm curious, if we were to do a retrospective on L2s and how their business models have evolved. There's a lot of really interesting stuff, by the way, we could talk about. We have on this podcast in between the different model of an Optimism versus Arbitrum, which had very different approaches. But, what's our retrospective on L2s? And maybe we could start to knit this into, some of the analogs of like the Red Hats of the world, right? And some of the way that other commercial open source software companies have monetized.
Yeah, I'll leave it to you guys for the analogs, I think, but I can give my view on, I guess, L2s and where they're at right now and where they've come from. So I think that when L2s started going live, the reason why they went live in the first place was because Ethereum wasn't scaling, to be honest. And so Ethereum deliberately tried pushing this narrative of like, we want really strong builders to develop layer twos to get people off the base layer, to make sure that the base layer isn't too expensive for like the operations that matter the most. I would say like since then, especially in the last 12 months, it's very clear that Ethereum is trying to move towards the base layer again as they continue scaling ZK EVM, et cetera, et cetera. And so even when they tried pushing activity to the layer twos, you're seeing now that like a lot of activity just stayed on the layer one, to be completely honest. At the same time that Ethereum drove that layer two narrative, Solana popped up and they have this whole layer one narrative of like actually keep everything on the base chain. And we've seen how successful that is. So in some sense, like, yes, Ethereum is similar to the analogies we were drawing on before of like open source software, people building tools on top of that, different business models. I actually think where it gets quite interesting is like we have seen some layer twos with some success, but there's a power law. And like that was pretty clear from the start that was always going to happen. And that's why so much venture capital funding went into this, because everyone was seeking that power law in the layer two landscape of like, there will be one or two layer twos which have enough of a user base and liquidity and state to actually make it and continue being significant as we keep going forward in crypto. Those two layer twos right now, really, I think, I mean, we have different opinions on these two layer twos, but one is Arbitrum and one is Base. And I would argue that Arbitrum is more of a kind of DeFi chain. Base, we've described before in the past that it's kind of working out what it is. I would argue that Base right now is kind of more consumer appy, moving towards crypto AI, some payments, etc. And then you have Ethereum, the base layer, the layer one. I think Ethereum is like very, very clearly right now like a DeFi chain. And I think all of us can probably agree on that as well. But then you kind of have those bases covered in like what a blockchain actually needs. I'm not sure Ethereum base layer will ever be like the layer that consumer apps are built on top of versus like a Solana, for example. But I do think that having that layer two there is very important, like a base that then rolls up to Ethereum base layer. I think where it gets interesting is like, you know, we didn't talk about this before, but because Ethereum is still so, you know, decentralized and we're still working out what the value of that actually is, I do still continue to make the argument that Ethereum does have some monetary aspect to it. And I do think it's one of the most credible assets we can talk about right now outside Bitcoin that does have a monetary aspect. And that's hence why I do believe why it does actually have some monetary premium. When you look at the other kinds of assets like Hyperliquid, etc., it's not as open and open source and transparent and decentralized, et cetera, et cetera. And therefore, a lot of the REV, like you were saying before, Mike, is actually valued in a different way. It's very much like a normal business would be. Layer two is the same, where you have one node taking all the transactions, all the data, you know, making sure it's verifiable, rolling that up to Ethereum. But then their business model was trying to capture and take as much from Ethereum as possible, which makes sense. So you have this kind of like, I think we're in this place right now where Ethereum and Base will actually end up competing with each other as layer ones and layer twos. And so this is where it's going to get very interesting, where we're very early in what this looks like. But I could see a world where, you know, Base takes so much power from Ethereum where they actually end up creating their own layer. And then, Mike, you've said in the past before, like, can you actually do that or not? I think it's TBD. I remember back in the day in the layer two landscape, you had like Starknet, etc., try to build layer ones almost. So they tried exploring what a layer one would look like. A lot of that was using the Cosmos SDK, which of course all of us here are familiar with. They kind of have moved away from that ultimately. And so there was a lot of talk back in the day of decentralizing layer twos. And that looks a lot more like a layer one when you have a decentralized layer two.
Yeah,
but
exactly.
right now, that hasn't happened. There's two or three main layer twos. I think they will continue winning. I also think Ethereum will continue trying to take what they lost from these layer twos. And then I actually do think that there will be some competition between especially Base and Ethereum, and there's some tension there. But yeah, curious to hear you guys see it.
I think I would just introduce, I think, the mental model that was not necessarily correct. And I think the jury is still out on who is going to win this. I would actually add to this pile. Optimism, I think, is still very much in the running here, as Base is on Optimism on the OP stack currently. They've been really successful at onboarding, you know, new chains like Ink from Kraken and things like that. So, you know, they're very much still in the running. The other, you know, interesting area where you're starting to see convergence, and Miles, got to give you credit for this. You were talking about this 2 or 3 years ago, but we just saw ZK Sync for their, Elastic chains. They launched their own RAS, like integrated service. And so people are coming, I think people are starting to arrive at this solution. And again, the analogy here, I very much view these businesses like Red Hat, where ultimately what people want, what your buyer wants, is because of this open source, also like real network of liquidity users, people want Ethereum, but they don't want the downsides of Ethereum, namely the cost. You know, Ethereum doesn't go down, but gas fees certainly do spike to a degree that it would disrupt your business operations, and that's not going to fly. So, I mean, it's just super interesting to hear how, Red Hat packaged Linux, right? Like the CIO wants Linux, but they don't want any of the risks of, downtimes. They need SLAs, right? They need to know who they're going to call at 2:30 or 3 a.m. You can't call anyone from Ethereum at 2:30 a.m. You might be able to call someone from an ecosystem like Mega ETH eventually. I don't know. And so I think that those exact same. So I think that the mistake that a lot of these L2s made was, I think they went a little bit too hard on building their own ecosystem when really what they were was they should be leveraging, and they kind of did this naturally, right? Like they all like, we are Ethereum, but they should focus on repackaging Ethereum to make it attractive, as opposed to, I don't know, the jury's out on whether you're able to build their own ecosystems. And I think that'll actually be the challenge for Base Safe, to flip it around, is like, it could go really either way, right? And you've seen different roll-up frameworks take opposite strategies here of, Arbitrum 1 has been unbelievably successful. Like I think are kind of the only L2 that has this really like deep and liquid and used DeFi ecosystem, which is super valuable. And it feels like other L2s have taken the strategy, like Optimism abandoned OP main chain. And they said, no one's going to use this. Everyone's going to want their own chain. And so frankly, the jury is very much still out on, there's probably a path for multiple chains to win here. I'm sure there will be, but
yeah.
I think the model is less ecosystem, more Red Hat.
Right. I think it's like, they all came from the same starting point. You develop a roll-up framework, right? And then you have two paths. You can build a first-party roll-up, right? That's OP1 or OP mainnet, ARB1, and that's easy to monetize. It's just like an L1, except you don't have to share it with validators, right? Usage fees accrue directly to you. But the more you prioritize your first-party roll-up, the less that you can really optimize for wide adoption of your roll-up framework, right? Because
that's such a good point.
If you are pouring all of the resources and growth marketing into your first-party one, the less likely a really high-quality, company is to adopt your framework, because they know that you're going to be competing with them instead of prioritizing them, right? But it is much more simple to monetize. So I think, you could argue that like ARB1 is basically focused on that, even though they haven't really, but that's the way it's played out. Then Optimism, I think, to your point, looked at this thing and said, well, there's no way that OP mainnet is ever going to compete with Ethereum, right? We're not going to try to. We're going to try to have like as many people adopt our rollup framework as possible, all for like different use cases and different companies, different flavors, right? And then we're going to connect them all. And I think dream formula here, which is finally being done by ZK Sync, is that, it's damn hard to try to monetize a rollup framework without like a RAS solution. It's just, you're not giving enough, right? Like with a RAS solution, you are hosting the rollup for them. So it's no DevOps headaches. You're keeping upgrades in line with like the core protocol. You are building indexers. You're building plugins for every single critical third party, service that they would need anyways. And instead of, you're taking that off of the plate, like the discovery work of going and finding those, it's more like if you go to Conduit's website, it's like boop, boop, boop. All right, got my roll up here. And so I think the big mistake was that the equity company should have launched, like the devco that built the open source rollup framework should have built their own RAS solution. They can monetize the equity company from that RAS solution. Sure, at some point down the road, you want to start doing buybacks of like a governance token from it. Great. But I think what ZK Sync's doing, which is super elegant, is that token value accrual is baked into interop between the different frameworks, and it's baked into settlement to like a common, L2, right? And they're monetizing like the hosted services with a RAS business, and maybe that ends up buying back tokens. Maybe it just is used to like fund growth and development of the devco, right? Without having to ask the DAO or the token holders for money, which is really, really elegant. And so this to me was like, why isn't anybody doing this? Why is OP like letting everybody eat their lunch back in the day? And I think, Zaid, to your point, like the funny thing is, if you really want to optimize for that first party rollup and make it as big as Ethereum, like the logical thing is to decentralize that rollup, right? So that it's censorship resistance, even like in a short term CR standpoint as a blockchain, and nobody's done that yet. And so what has also been interesting is like, you're right, Mike, like OP basically they said, oh, Base might adopt our framework. Like, yep, Base, we are going to deprioritize all activity on OP mainnet. This is going to we're going to push that to you. And that was probably part of like the unspoken agreement. It doesn't seem like Robinhood's, Arbitrum framework has really siphoned off that much activity at all. I don't even know what the status of it is, frankly, from ARB1. But yeah, I think we'll see like the logical nice balance of token usage, value accrual, off-chain revenue that's geared towards broadening adoption with zk syncs balance. And yeah, I think that's one of the things I'm paying attention to. It's taken a long time.
Maybe just to chip in briefly, I think where you don't want to be right now on the open source stack is like in the middle. So I would make the argument that deploying rollups on behalf of people and finding other people with large user bases to then support, you don't have any economic power over these teams because they own the end user. And then on the flip side, that settlement layer of Ethereum, you also don't own that because you're never going to outcompete Ethereum in the EVM ecosystem open source right now. So I do think there's some tension again here around yes, there are now rollup as a service layers, but do they actually accrue any value, and how competitive this whole stack is, where the next person comes out with the next framework. And I also just wanted to briefly touch on this as well. You don't want to be the Cosmos SDK of blockchains, because I think where a lot of
plus one
these rollup frameworks are kind of trending towards, because Cosmos SDK, okay, what was it? It was an open source stack and it was beautiful and you had interoperability, but it sort of did fail to capture value across the entire Cosmos SDK stack. And I think a lot of these RAS frameworks could suffer a similar fate ultimately, because unless they actually own this end user, and of course the Cosmos SDK, you could own the end user at the same time as owning the base layer. That was the beauty of Cosmos SDK, and that's what Hyperliquid is actually building on top of right now. So that's, to some extent, it's like Hyperliquid won because it had the state, it had the liquidity, it had the users, it had the adoption, it had the it had everything. The underlying stack, the people talk about right now in crypto, Cosmos SDK was the best stack to build Hyperliquid with. No one really talks about that. So I do think the risk on some of these more RAS providers, like Optimism, etc., is that's great. They could be the underlying stack, and they might try and make that their business model. But how much are people willing to actually pay for that versus just building the stack on top of them and trying to take as much ownership as possible? So It's an interesting way of viewing.
I think it all comes down to is there one instance of this thing that everybody uses? If so, then it's actually very easy to monetize through usage, right? I could argue the same thing for Aave and Uniswap. You could have forked those a long time ago, but there's one instance that had the liquidity, right? So people will pay to use it. Cosmos SDK, there was not it was an internet of blockchains by default. And then it's you're kind of looking for ways to back into monetization from that. And it's been really hard. I think the IBC routing hub was one idea, and usually it comes down to interop between these different instances that people try to land on, but it hasn't been simple. And then I would also argue a lot of middleware has taken this trying to be POS approach as well in order to have some sort of monetization, that's baked into usage. As I can tell you, we're building a lot of Delta's built heavily with SP1, and you can run those proofs locally as a domain on Delta, or you could route proofs to the Succinct network. And as one of the builders of Delta, I was pissed when I found out that you had to use prove tokens to use the Succinct network. I was nobody we just want proofs. This can just be a SaaS solution, right? And of course, they have other sort of monetization, they have other sort of pricing models now, and I got walked back off the cliff. But that is kind of the skeuomorphic. We have this, we want a token, we see this elegant usage thing, and then that just turns out to kind of degrade the product if you push it too hard. So. Yeah.
One thing that I want to transition us here to AI and what's changing here. So if I just had to summarize this, right? the through line of this episode is software, how it's developed, the different business models that have arisen around it, and what changes crypto and eventually AI are bringing to open source software specifically. And I think hopefully some of this has been enlightening in terms of, Miles, this is your observation, and I completely agree. I think the L1s are unique in the sense that they broke this trade-off. I think we applied that model of L1s to a bunch of different layers of the stack, especially around infrastructure, and it hasn't worked for a number of reasons. That's far from saying that these companies are not going to work. I think that they will, and they'll be very successful, but they need to, there is going to be consolidation, would be a prediction, and you might actually see a change in business model. It's possible that maybe they could optimize for something that looks more like a recurring revenue sort of SaaS stream. The only thing that gives me some amount of pause in hearing you say that is at the same time that we're talking about enterprise and B2B SaaS, that whole industry is getting, that whole model is potentially at risk from AI. And maybe whoever wants to take this, because I feel like I've been monologuing a lot this episode, but I mean, Zave, lead us to the promised land. Give us, how should people think about AI and these LLMs impacting B2B SaaS as a bit? First of all, why is it so disruptive? Why is it potentially disruptive? Why are people concerned about this? And then how is this impacting business models?
Yeah, I think in general, of course, AI is impacting many, many industries in different ways. And, to make it a bit more relevant to crypto and AI, I guess, which is sort of the crux of this podcast, there are, right now with OpenAI, you have ChatGPT, etc. You have these massive models that pretty much all of us use today, Google, Gemini, etc. And these models are closed source. And actually, there are many parallels you can draw on AI to kind of like finance, actually, and why crypto was created in the first place. And really, ultimately, there's one word for this, which is trust. And so, we lost trust in the financial system, back in 2008, global financial crisis. And that was when Bitcoin was born, an open source stack for finance and money. And then Ethereum built on top of that. And we've made many, many improvements since that date. So I think with AI, we're going through a similar thing right now, which is actually that a lot of power is in the hands of the very few, like we had with the financial system back in 2008. Maybe there are still some massive power sort of pockets in the world still, which they ultimately could still go down and make a big impact. But we have this alternative financial system, which like we can still use regardless of where the power falls across the world. Mm-hmm. With AI, I think it's a very important initiative to continue looking at open source through blockchain, because we have this technology stack that is an alternative in case it's like this hedge against AI in the real world, potentially creating something so massive that it's like actually impacts all of us. And that's actually a non-0% chance of happening. And so what's actually important right now is that open source tries to keep up with closed source improvements in AI. And you're seeing there's actually a curve right now, which we can maybe put in the footnotes of this podcast, where open source AI performance is actually catching up to closed source AI over time, as closed source now is a bit more incremental when it comes to improvements. Whereas open source AI, for example, most of us heard 12 months ago when DeepSeek came out with, open source weights and open source models, that was like pretty much almost on par with like some of the closed source models at the time. So there's a gradient, and I'm sure we'll touch on this in the kind of crypto AI episodes we go to, but this gradient for open source AI, even Meta, which we mentioned earlier this episode, they were somewhat open source, but actually they were open weights. And so it's still very hard to decipher exactly like what was going on in the model, what data were they like using to train their models, etc. And so even Meta, when they were saying they're open source, is terminology, but it's a marketing thing of like saying they're open source. So crypto really brings this pure open source like version of AI to the world. And I would say that there was a lot of hype in open source AI with crypto incentives. And a lot of this draws on what we've said in this entire podcast around like using incentives, using a network for usage, aligning incentives with contributors, having anyone contribute to an open source stack. And actually, in that way, theoretically, this market can actually value what these AI models are actually generating as outputs, which we don't have anywhere else actually in the world today. And so more like recently, I've actually been spending a bit more time in the BitTensor ecosystem. I think this came out all of a sudden and there was a lot of AI hype, and then BitTensor kind of popped up as this ecosystem. And then what's very interesting I find about BitTensor is that you have kind of people really solely focused on this ecosystem. So it's a large enough ecosystem in crypto for it to matter enough for people to build funds around, build ecosystems around. DCG is very involved in this ecosystem, for example. And what BitTensor is, as like one way of open source AI, is really contributors giving their models and trying to respond to user inputs in the best way possible, and actually competing against all the other miners, let's say, in this network. Then you have another layer on top, which are validators, which are ranking these responses, and then the best responses are ranked using this algorithm, and that is the consensus. And then that is the free market way of responding to user inputs using the best outputs of the network contributed by these miners open source. Theoretically, they're always going to be incentivized to contribute their models because there's Tau tokens being, there are Tau emissions, which is the token of BitTensor going to the best models. And so you create this free market for AI, actually, which is very early still. I think there's like maybe 100 plus subnets at the moment, and each subnet is specialized on something different in AI. But in general, it's one way of looking at how we can think about AI as a free market, which is still early. And the question is like, are the responses of the open source models actually good enough versus the closed source models? Because most of us just use ChatGPT or something right now, which is just handles a lot of this for us. But BitTensor and open source AI is getting to the point now where like open source performance, a bit like money and finance has in blockchains, across the last 10 years, is catching up to closed source. And so I do think there's a lot of things to be said around open sourcing AI, using incentives, aligning contributors to the ecosystem, having code. A big thing with open source AI as well is actually just transparency and auditability, which you didn't have in finance for a long time. And that's actually what sort of brought the whole ecosystem down in 2008. So if you can bring explainability, transparency, auditability to AI, which actually isn't there today, I think this would be huge in like the long term. The question is like, where is the value today? And I think we'll explore this in the crypto AI sort of like themes and topics we touch on in the next few weeks. But there are certain subnets doing actually quite well in BitTensor. There are things outside of BitTensor right now happening in open source AI, which don't touch crypto as well. Like, for example, what Meta has done, which we touched upon, and some other things like DeepSeek. But I do see a convergence of open source AI like DeepSeek with blockchains, for example, getting these models on chain, allowing people to contribute data, for example, which of course is a bottleneck in closed source AI. And we keep saying that this is a problem. Maybe in the past it hasn't been a problem because there's been new techniques developed by AI companies, but at some point there will be a lot of value in contributing certain amounts of data and getting sort of paid for that data. And that's a very crypto related concept. There's another point of like models themselves, how they're commoditizing anyway in the closed source world. And so if you have a commodity as a model, bringing that on chain for everyone to use and then building apps on top of that to capture that value, I think is a very, very possible way that apps could monetize in future. They won't need to use OpenAI APIs. They can just use actual open source APIs via blockchains for much cheaper. And so you can see ways that the business model can change in AI. It's still like very, very early on in its sort of lifetime, but I do see a viable path actually as open source catches up to closed source in AI for it to become this massive thing in crypto as one of the blockchain's actual biggest use cases. But again, it's very, very early. And again, it's like, I maybe would make the prediction, which might be a bold prediction, that an open source AI company like a DeepSeek or like something else will try and monetize via blockchain at some point in time, because it just makes sense. Like we've talked about in this podcast about using a blockchain as a way to monetize open source software. I wouldn't be surprised if like actually one of these models came out eventually when blockchain technology is actually good enough for people to use to monetize in that way. So it'll be interesting to see how like time frame that happens.
Yeah, because that would be more like a DePIN play or just like a liveness and like verifiability play. Like it's not actually like a blockchain in the classical sense, but like all the validators are running the model, 2/3 sign off on what they return to you. And yeah, if that can be competitive with just, running a single instance of it, we'll see. But
it could also be like a roll up realistically. Like you could just have one or two nodes like running the model, and as long as it's kind of verifiable and the data is available, for example, and you can check that on chain and then maybe reward some kinds of contributors. I've actually spoken to a lot of teams working on like contributing data to different models, and it's really hard to do at scale. So the question is like, can they do that? Who will do that? And how much value is there in actually having an open source model which is run with similar performance to closed source, which people continue to contribute data to? And like, can that be a viable approach to AI outside of what we have today? So I think the jury against
super interesting. And that's why I'm not sure how many episodes we're going to do on AI, but like we need to have more than one, because like it is, there's intersections, with crypto or blockchain at like every layer of the stack, from like model development to like who's actually running the model, like making the models, like pushing the models to be somewhat deterministic. Like that's kind of what Eigen's doing. And then, we can talk about what we're doing at Delta, and like a few others are in terms of using like blockchains to anchor guardrails. Right. So yeah.
You know what I would also say is, I think there are 3 areas that I would point to, Miles, to go to your last point there. I think eventually doing things like spending money on chain, there are fewer hoops that you need to jump through, like banking APIs that you need to call. Value moves easier on chain than it does on the TradFi patchwork L1. And I think that will eventually be a big advantage. We talked about, I don't think it's maybe as soon as you guys do, but I do see a huge advantage there. The other things are a little bit murkier, but we've talked about crypto unintentionally sometimes foreshadowing the future. And Miles, we were talking a little bit before we got on that how do you build a moat even in closed source software like SaaS today? If, soon AI is going to be good, that you can essentially fork closed source code. And I think that people will learn from what's happened in crypto, and we could do a whole episode on forking. And I think the business model of how you build up and retain value and build a moat, I think traditional software companies should look at crypto who has been competing in this environment for a very, very long time. And I think that there's a real connection there. And then lastly, there is a model in the pricing model in SaaS is changing. And it's going from, monthly or quarterly or annual, flat recurring fees into something that's more usage based. And it's interesting, like when we go back to L1s and their model of essentially usage based fees, that looks a lot like where we might be headed with these LLMs and AI. I mean, it is interesting, right? That I don't know if any of you read, and we should probably jump off with this because it was so good, the Ribbit piece on tokenization, connecting the idea of tokens that are used in LLMs with tokens on chain. It is fascinating. But I think that's the ultimate connection there is you can envision a world very easily where everything is this digital representation and, you're feeding things into an LLM to help you get an idea. And actually the usage-based model, maybe with like a margin on top, makes more sense than a SaaS model. So the world is changing really quickly, and it is super interesting. And I think, we wanted to introduce, we had this idea for doing an open source software, history retrospective and how it fits into the evolution of crypto and AI. But I think that's a really good lead into the next couple episodes that we'll do on AI and the intersection of AI and crypto. But I know, guys, we've already gone a little bit over, but this was a really fun one. And I'm looking forward to running this back next week with AI and AI crypto.
Let's do it. Thanks for having us, Mike. It was a great episode.
That was a blast.
That was great. Bye, guys.
Cheers.